All right, thank you, Paul. For the record, I did not request the last spot this year, so Pete's going to get it next year. Oh, you stole it? You're trying to sabotage my presentation here. Trying to keep you entertained for at least the next 20 minutes here. I did have a colleague who suggested that I should probably wrap my presentation to the beat of Baby Got Back, but I'm going to leave that challenge up for someone next year. Maybe Pete. I think he'd be good at that. So let's get started. So thank you to MEREDA and Shelley for this opportunity once again to present to you the Southern Maine office market forecast for 2017. Before we get into too much forecasting, we're going to take a quick look back 2016, really how the market's shaping up towards the end of the year, moving into 2017, some of the vacancy trends, significant transactions, and what we can expect moving forward. So a lot of the information I'm going to present to you today is really based off data gathered at CBRE, the Boulos company, as part of our annual market outlook. This is a publication that touches on all aspects of commercial real estate, but really focuses in on the office sector in Greater Portland, which is the information I'll present to you today. Just actually released this yesterday. Make sure you pick up a copy on your way out before the end of today. And thank you to Jessica Estes and others at the Boulos company for their hard work. It's a great publication. So in this publication, we survey 343 Class A, Class B buildings of total market size, just under 12 million square feet. That may change by next year, so talk about that a little bit later. But we organize all of this data into 7 submarkets, as you can see organized here on the slide. Some are large, some small, small being Westbrook submarket, large being downtown Portland, as you can see. That's the dark green piece there you see in the pie chart, over a third of the total market size. So as we move through and really try to identify where the action was in 2016, what we can expect, I compare downtown Portland versus the other suburban submarkets that you see listed here, as well as Class B versus Class A office space, to really see if we can pinpoint where the action is moving forward. So right into the information, the total direct vacancy rate for 2016 is down slightly to 6.17%. This is down from just 6.53% the year before. However, it is down from a height of over 11% in 2010, and we are just about back to pre-recession levels, which were just under 6% back in 2006, 2007. So with that slight drop in the vacancy rate, there was another year of positive net absorption. However, it wasn't quite at the rate that it was in 2015 or even 2014 for that matter. So maybe a slight indication that maybe the momentum that we saw the previous 12 months, the previous 24 months, maybe slowing down a little bit, maybe reaching a little bit of plateau, but I think also really bringing some astronomical numbers that we saw last year just kind of back down to earth. I think one of the major stories last year for tenants, especially in the marketplace, is just the limited number of large contiguous office spaces in the market. I think as of right now, especially in downtown Portland, especially in Class A, there is only one option over 8,000 square feet available that's being marketed, and it's a sublease, so it doesn't even have a direct effect on the vacancy rate. And then the last couple of years, I've stood up here and talked about a gradual shift to a landlord's market. I think we're pretty much there across all 7 submarkets. The landlords are calling the shots. They're not offering as much free rent. You know, I do think that opportunities exist for tenants in the marketplace, and I'll be sure to point those out as we move through, but landlords just not moving off their asking rates as much as they were 3, 4, 5 years ago. And with that, we did see an increase last year in the Greater Portland office market leasing rates, or at least the asking rates. There really wasn't much movement at all between 2009 and 2014. There was a slight increase in 2015, but almost a 4% increase across the board in just the asking rates. And actually different per submarket in downtown Portland Class A, that asking rate last year jumped up to about 6% over the year before. That's about $1.40 per square foot. So there's not a lot of information to go with. As Pete mentioned, there aren't a lot of properties to really compile this data, but that's still a pretty large jump in just the asking rates. And I think landlords are being bullish on those asking rates. They're pushing the envelope, especially in the Class A properties, and I think we'll continue to see that happen. But with all of this action last year in the office market, there was actually a decrease in the transaction volume for the first time since 2009. It was actually a pretty sharp decrease, and transaction volume is just the number of leases over 500 square feet that are just signed over the previous 12 months. So we saw a sharp decline in 2016 back to the same levels as 2011, 2012. And also speaking with a few brokers in the room today with properties they represent and tenants that they represent, that demand level, I asked them to kind of explain the demand level and what they're seeing. And I think most said that it's slow or slowing. A few said stable, the suburban market more stable, downtown definitely somewhat slow. So despite a very tight market, according to this vacancy rate, the demand really not putting too much pressure on that low supply. And then also another big story of 2016 is new construction takes shape. We saw this in the suburbs with small to large projects, but also most importantly, the groundbreaking of a building downtown, office-related construction, the first time in almost 10 years. So I'll touch on that a little bit. So we're going to move through the submarkets to kind of really see if we can pinpoint where the activity was in 2016. This slide shows the 7 submarkets I mentioned before with the trailing previous 3 years vacancy rates. Overall, 5 out of the 7 submarkets saw a drop in the vacancy rate last year, so across the board, fairly good action. In downtown Portland, which represents over a third of the total market size, a fairly significant drop in 2016. And then also suburban Portland, Falmouth, Cumberland, Yarmouth, even Westbrook seeing a drop in the total vacancy rate. Westbrook is very high due to one significant vacant property, which I'll talk about in a little bit. But then you move to the Maine Mall area and the Scarborough, South Portland areas, which actually had increases in the vacancy rate. Now, the suburban market overall across the other 6 submarkets did see a slight increase in the vacancy rate. So really where you pinpoint that is due to the Maine Mall area and South Portland, Scarborough, which makes up over 25% of the total market size, really taking over any success that you saw in the other suburban submarkets. And then medical office space continues to operate at a fairly healthy level. A little drop last year, as it always is historically, performs fairly well. So I want to look at this from a different angle, see if we can really try and see where the trends are, if this works. There we go. So this is comparing Class A versus Class B real estate, starting in the suburbs. The dark green bars representing Class A office space. And as you can see, since 2012, a little bit of a drop, steady drop, but over the past 12, 24, 36 months, really not a lot of activity or dropping vacancy rates in the Class A market. And the same goes for Class B over the past 2 to 3 years in the suburbs. Not a whole lot of change. Actually, you do see that Class B between 2015 and 2016 did see a slight increase. So we can say that that slight increase that we saw in the suburban market was really due to Class B properties in the Maine Mall area and the Scarborough, South Portland areas. But really not overall, not a lot of action between Class A and Class B in the suburban market to really shift that vacancy rate that I showed you in one of those earlier slides. But then we move to downtown Portland. So starting in Class B office space, the light green bars, a fairly steady decrease since the height in 2011, and a little bit of a dip last year, actually going under 10% for the first time in 3 years. But then you look at Class A office space in downtown Portland, from a height of over 14% in 2011, and then a gradual drop and a big drop in 2015 from 9% down to just under 5%, and then last year from 5% down to the 2016 vacancy rate of 2.62%. So when you look at the overall market, the overall drop in the vacancy rate, I think it's pretty safe to say it's almost entirely due to the downtown Class A office market. That's really where the action was in 2016. So looking at a few of the deals that helped shape these trends, this is a list of significant transactions over the past 12 months in downtown Portland. Right off the bat, due to the limited supply, there just were not as many large transactions. I think on this slide last year, I had 8 transactions total, 4 of which were over 20,000 square feet, not one deal this year over 20,000 square feet. And like I said, that's just really due to limited supply. And also 4 out of these 5 are in the Class A market. The Beacon Group moving into 284 Street is a large deal last year at 17,500 square feet. And also another one to touch on would be 16 Middle Street. This is the new construction I mentioned just off of India Street. Tilson Technology Management leasing 16,000 square feet in that building, as well as Maine Magazine leasing almost 10, not quite making the slide, but pushing that building into breaking ground this past summer. And then the lone Class B option on the marketplace would be Opportunity Alliance, consolidating a couple locations and leasing almost 15,000 square feet in the Bayside neighborhood. But when you have overall a limited amount of new large lease transactions, you get a large number of significant renewals. On this slide last year, there were only 2 to 3 significant renewals, 7 total this year. 6 out of the 7 are in the Class A market. Likely these tenants just did not have the options to renew. Sometimes speaking to Class A tenants this past year, the options were renewing or new construction, which can take up to 18 months, which isn't an option. So it could have been an easy decision for some of these tenants to renew. I think I only saw maybe 1 or 2 actually even out in the market touring spaces. So out to the suburbs, similar type of story. Limited number of new lease transactions, not one over 20,000 square feet, indicating a fairly tight market in 2016 in the suburban market as well. Even the largest deal last year, 18,000 square feet, that Sebago Technics leased in the John Roberts Road Business Park, was actually just a relocation within the existing park. So really only a couple other deals over 10,000 square feet in the suburban market. And once again, similar story, a larger number of significant lease renewals in the suburban market. What's interesting about this slide is actually all of these properties are Class B office buildings, possibly indicating that that limited supply isn't just for the Class A options, but also in the suburban market, could certainly be the Class B options as well. But speaking of Class B, moving into 2017, right off the bat, what do we expect? Where are the holes in the marketplace? And these are the significant vacancies in downtown Portland as of maybe a few weeks ago. And one thing you'll notice is that they're all on Congress Street. They're all in very close proximity to each other. They're all Class B office buildings, and they're all concentrated around the Monument Square area. This is where really the big hole is in downtown Portland. When you look at Monument Square, out of the total, I think it's 232,000 square feet of vacant Class B office space downtown, about 80% of it is in the immediate Monument Square area. So I think if there's really going to be any movement in the Class B market as a whole, or even in downtown Portland, I think it really needs to start with a significant lease in one of these 4 buildings. But then you also speak of opportunity. The lease rates, as I mentioned, going up last year, that did not happen in the Monument Square area. This is where the opportunity is for tenants to get a good deal. They can drive the deals as opposed to landlords. And this is where you find the large contiguous office spaces, 13,000, 15,000 square feet. So it'll be interesting to see how these buildings shape up next year. Actually, I think 3 out of these 4 buildings were on the list last year. So not much change in 2016, but I think we can be hopeful for 2017. And then moving out to the suburban submarkets, significant vacancies, 222 St. John Street, about 25,000 square feet. However, this is made up of small to medium-sized offices, though they could do a fairly significant contiguous space in that building, that Class B building. The lone Class A option on both downtown and suburban would be One Riverfront Plaza. And this is really that significant deal that I mentioned that's really driving that Westbrook vacancy rate up. I mean, this building's a game changer. I've been talking about it a couple years now, but if this building really were to fill this year, then you would see a big correction in the overall suburban vacancy rates, and even the vacancy rate as a whole. At 134,000 square feet is a big hole for a market that's only 12 million square feet total. And then 8 Science Park Road and 75 Darling Avenue, 2 relatively new significant vacancies that popped up this past year, but once again, in that South Portland and Scarborough submarkets that saw that increase in the vacancy rate, and these are both Class B buildings. So we'll see what happens with these moving forward. And then every year I like to touch on significant sale transactions over $5 million, office-related transactions in the greater Portland area. And once again, similar to the leasing market, the supply was just extremely low this year. Only 3 sales this past 12 months, office-related, over $5 million, not one over $10 million. Whereas last year, we were really spoiled in 2015. This slide, I think, had 8 properties total. And that was the year that we saw 100 Middle Street close, 1 and 2 Portland Square. I think 5 of the buildings were downtown Portland. Only 1 significant sale in downtown Portland last year, which was 482 Congress Street at $5,400,000. And really, this has nothing to do with the demand by any means. I mean, I think 42 Congress, we received up to 10 offers on that property. So I think it's more about the supply. Now, I think 2017 is already off to a strong start. Just a couple weeks ago, 100 Larrabee, their Larrabee complex, 100,000 square foot facility in Westbrook, selling for $7.8 million. And then just yesterday, 82 Running Hill Road, 120,000 square foot Class A office building, selling for an undisclosed price. But I can tell you it was probably more than one of these. So I think 2017 is already off to a very strong start. And then I can't go through this presentation this year without talking about new construction. And starting with 16 Middle Street in downtown Portland, currently under construction, 55,000 square feet just off India Street. Now, normally I wouldn't make such a big deal about a 55,000 square foot building being added to the marketplace, but as I mentioned, this is the first new building in downtown Portland in almost 10 years. And I went back and looked over the past 60 years in terms of when buildings were added to the marketplace in downtown Portland. And this 10-year stretch is the longest that we've gone in 60 years without a new building in downtown Portland. So it's definitely significant that this has finally gotten off the ground. And then even out into the suburbs, some action, especially in Yarmouth. Small to medium-sized new construction, but at 1 Tyler Drive, Tyler Technologies campus, adding a 95,000 square foot facility there. And then Patriot Insurance building a 34,500 square foot building on Route 1 as well. But then heading back to downtown Portland, really, what are the chances we're going to see another building added to the marketplace, or at least break ground, or a significant lease assigned to start moving that forward? This is just an example of 3 kind of small to medium-sized properties that are being marketed right now, trying to find office tenants. You know, unlike Justin said earlier in the industrial presentation, which I couldn't believe people are building on spec. That's just not happening right now in the office market. These buildings all have to be 50% pre-leased at least before a landlord can break ground on these buildings. But so a lot of it depends on the tenant demand, who's in the marketplace. And there are large tenants in the marketplace right now, but there also has to be some sort of pattern. When are buildings constructed in downtown Portland, and really what is the driver? So I went back and looked at information. You know, CBRE, the Boulos company, has been compiling this vacancy data for the past 20 years. So I did a vacancy graph for downtown Class A vacancy over the course of the last 20 years. And as you would imagine, it has its ups and downs like any vacancy graph would, peaks, valleys, Mount Everest in 2011. And then you have your dips, you know, 1998 to 2004. You have your drop in 2007, 2008. And then just another drop in that vacancy rate starting this past year as we went down to 2.62%. Exactly how low will that go? How long will it last? We don't know. But when are buildings built? Low vacancy obviously equals new construction. However, in Portland over the past 20 years, in terms of the pattern that I found, it's almost like clockwork. So that orange dotted line represents the 4% vacancy rate for downtown Portland. Over the past 2 dips and moving into the third one, every time the vacancy rate drops below 4%, there's new construction. 1998, vacancy drops below 4% after several years well above 4% in the 1990s, and you get the construction of 145 Commercial Street. Then over the course of the next 4 or 5 years, you have construction of another 4 buildings, adding 279,000 square feet to the marketplace during that time period. Vacancy rate jumps up. No action for a couple years till it dips back down in 2007 for just a real quick trip below 4% in 2007, 2008. 3 additional buildings being constructed for a total of about 200,000 square feet of space added to the marketplace. Then the market rate jumps up for the next 9.5, 10 years, as I just talked about. But lo and behold, this past year, supply extremely limited, vacancy rate drops below 5% or 4%, and you have the construction of 16 Middle Street at 55,000 square feet. So a lot of this depends on tenant demand. It depends on whether tenants can pay the extra lease rate that is required for new construction, sometimes $6, $7, $8 a square foot more than existing space. But when your options, and if you're an expanding company, are to lease a Band-Aid space across the street for 10,000 square feet or pay a little bit more and get a large contiguous office space like Tilson Technology Management did. And I think as long as that vacancy rate can stay below 4%, being a little bold in this prediction, we will get new construction. And I do think that will happen in 2017. It's easy for me to say because I'm not paying for these buildings. But I do think that we will have at least 1 or 2 more buildings. Is it going to total 200,000 square feet? I don't know. I think it completely depends on how long we can stay below that 4% vacancy line. So overall, moving into 2017, I think we'll continue to see drops in the vacancy rates across the board. I think the suburban market will come back and we'll have a slight drop there, but it won't be anything like we saw in 2014, 2015. As I mentioned, you know, there's going to be likely less absorption. We're hitting a little bit of a plateau, I think. At least the momentum has slowed down over the last 2 years. And that landlord's market is not going anywhere. That's certainly going to remain for the next 12 months, 24 months. You know, that action lags a little bit behind the vacancy data, and they're going to continue to push those lease rates up, at least those asking rates, as much as possible. And then lastly, I do think, as I just mentioned in the previous slide, we will see a couple new projects break ground, add space, get over that 12 million square foot mark that I mentioned in the first slide. And so overall, I guess what I leave you with is that the greater Portland office market is extremely tight. Our vacancy rates are low. There's limited supply, but at the same time, I think that it's a very well-balanced market moving into 2018 and possibly 2017 and possibly 2018 as well. So thank you to Jessica Estes and Michelle Peacock at my office and everyone else for compiling this information. Thank you.